So the overall stock market just hit new all-time highs, and this is in sync with what I shared in the previous video on how we had some buying to dip opportunities recently and how we were likely to see the market to continue pushing upwards into new all-time highs. And I want to go ahead and share some of the positive data points that support the momentum of the market continuing to push upwards. A lot of positive news that I want to go ahead and share, starting off with the first positive, which is of course yields, right? In the previous video, I mentioned how the 10-year treasury yield was pretty high, kind of high to what we saw back in April 2024, and this was causing some selling pressure for the stock market. And I mentioned how we were likely to see this fall downwards. It kind of lined up too high with inflation expectations and what we recently got in terms of data from the Federal Reserve, but this coming down was going to be very bullish for stocks. And one of the main reasons why a high 10-year treasury yield can be bad for stocks is because it reflects higher borrowing costs and often signals rising inflation or expectations of tighter monetary policy. And so when you have yields that rise, companies face higher costs to finance debt, which of course squeezes profits away. And then one other thing that you want to consider is that when you have the yields high, it makes bonds more attractive to stocks, and it draws money out of the equity market, and kind of it lowers stocks, right? So kind of think about this. Imagine you're an investor with millions of dollars, right? You see that you could put money into the stock market, which isn't guaranteed, or you could put money into the bond market with this yield that's pretty high. Well, if you're uncertain about the future, you're going to say, well, I'll just put my money into these bonds because the yields are pretty high and I'm not sure of how the market's going to do, so I'll go ahead and do that. And so when yields get higher, it sucks the money away from stocks. And I said, look, we're likely to see this fall down, and that's exactly what we ended up seeing. Now, I expect that this is going to continue to fall down. However, there are some bumps along the way in terms of, tariff talks and trade negotiations, but we'll save that for another video. Something else I want to highlight is RSP, which is one of the ways I like to look at market breadth. Now, I share this a lot for those within the Push and Profit private group, and I sprinkle it along sometimes in the public videos on why you want to pay attention to market breadth. And so what is this, right? Well, RSP is the S&P 500 equally weighted. So earlier I showed you how the S&P 500 hit new all-time highs. This is the same thing, the S&P 500, but equally weighted. Well, why does it look different? Well, here's something you have to consider. The S&P 500 has this weighting where the larger market cap companies weigh more. So think about your Apple, your Meta, your Microsoft, your Amazon, your Tesla, you name it. All those giant companies, if they're performing well, it can lift the overall S&P 500 upwards while all the other companies in the S&P 500 are failing. And so when you have this kind of divergence from the big companies pushing upwards but the smaller companies failing, it's a signal that it's not really a healthy market. But when you see the RSP, the S&P 500 equally weighted, starting to push upwards, well, that signals a healthy market. Why? Well, it's not just your Teslas and all your other large companies that are holding up. Now we see the smaller market cap companies holding up as well. And so that's a signal that the market is pretty healthy. So pretty bullish. Lots of positive news like I shared in this video, right? In the beginning of this video, right? But I also want to highlight that this is pretty much in sync with what I shared in this video over here just I think it was a week and a half ago. Or you guys could check out the timestamp, right? You guys are on YouTube. But pretty much I mentioned how Wall Street expert Tom Lee mentioned how the 10-year treasury yield was likely to fall down, and that was going to present some buying opportunities. And that's exactly what happened. And I shared my other points on, why we were expecting some bullish momentum to come soon into the market. Now, also, something else I want to highlight, and hopefully I'm not moving too fast, but we see that the dollar is falling down. Now, initially you would think, well, the dollar falling down, that's bad for stocks. But on the contrary, the dollar falling down is actually good for stocks. And I explained this for those within the Push and Profit private group as well, and also in some public videos I mentioned here on YouTube. But I'll quickly kind of break it down. This way everyone is kind of at the same level of like what's going on here. Because initially you would think, well, a high dollar is good. But that's really the perspective of a consumer. When the dollar is high, that's when you want to go travel abroad. You want to go to Japan, wherever, Europe, etc., right? Because now your dollar carries more weight, right? So you could go travel, you could go ahead. It's worth more. But the problem is, when the dollar is up, it's kind of bad for stocks because especially for companies that operate in internationally, right? Think of Tesla, right? They sell the cars in China, Europe, etc., right? And so a higher dollar makes US goods more expensive for foreign buyers, right? It reduces export demand and it hurts revenues for multinational companies, right? And so additionally, foreign earnings are worth less when converted back to dollars, which also pressures profit. So think of again the idea of Tesla. You sell, a bunch of cars in Australia or in China. Great, you're selling a lot of vehicles. That's good news. But what happens when the currency, let's say whatever currency you want to look at, right? We'll just use the yen, right? We'll just say the yen for Japan, whatever company currency you want to think of. You sell a lot of cars, cool. You collect a lot of foreign currency, and in this random example, we're talking about the yen. Well, now to convert the yen to the dollar's worth more now. So you actually are getting less when you convert it back to dollars, and that hurts the company profits, right? A lot of people don't think about that, right? Because of course we're selfish. We think about, hey, the dollar's up, it's good for me. Not really good for companies, right? And that hurts like revenues. And so these factors, they weigh on the stock market, especially on sectors like technology and industrials, which have significant international exposure. And so I said, hey, look, the dollar's pretty high. It's been pushing up high. A lot of it has been kind of talks on tariffs. Should I I'll leave that for a different video. We'll probably talk about tariffs and how that impacts the dollar maybe in a future video. Make sure to subscribe, by the way, if you like the way that I break things down. But all you have to understand is that the dollar falling down is pretty positive for the stock market. Now, it's not good for you if you want to travel, right? I mean, it's not that bad. We're still pretty high, right? But it's not as high as where we were just a couple of weeks ago. So if you want to travel abroad, this may be the time to take the PTO from your job and, head out there, right? But nonetheless, I want to share this because when I talked about this, and I made a video, right? I shared this online, and I got a lot of people saying, "Hey, Justin, the market's gonna crash. You're completely wrong." The internet trolls started sending me things like this. Luckily, I have thick skin, so things like that don't hurt me. I think it's funny nonetheless. Those internet trolls, it's kind of like a reflection of their own character, though. When they spread hate online. Nonetheless, we all have our individual perspectives on the market, and it's fine to disagree. But I just thought it was funny. People emailed me this like, "Oh, you're wrong, and here's how you look." Okay, whatever. Anyways, something else that's pretty positive is that the stock market finished higher on strong corporate earnings. And this is good, right? Because, we talked about things from a macro perspective when we're talking about the dollar, we're talking about the treasury yields, bonds. But what about the fundamentals of the company, right? Because when you put money into the stock market, you have to remember you're buying into a business and you want to know if the business is doing well. And so we're seeing a lot of businesses actually perform really well. In fact, we have here this report from FactSet, and I have a snippet here that I highlighted how overall 9% of the companies in the S&P 500 have reported actual results for Q4 2024 to date. Of these companies, 79% have reported actual earnings per share above estimates, which is above the 5-year average of 77%, which basically means we are beating, or not we, but a lot of these companies are beating the expectations that were originally set by analysts, and it's actually by a higher percentage than what we traditionally have from a 5-year horizon. And so this is good, right? This means that fundamentally things are looking pretty strong, and that's something you want to look at, right? You don't want to have the stock market high, but then you see company earnings are falling down. That's not a healthy market, right? There's something suspicious. Well, now it just looks like it's a fugazi market, right? These companies are high for no reason, just because people are buying it, right? Because you got to understand, stocks can still go up high even if the revenues from the company, the fundamentals are low. How? Well, maybe it could just be perception, sentiment. People just want to think about. Now, I'll use this example very loosely. We'll talk about GME, GameStop, right? When it hit these crazy highs during 2021, it was just people like stockpiling in, putting money into it. Was GME worth what it actually hit back then? No, right? But it was just money pouring in. And so it's just when people put money in, it's very bullish. It pushes the order books up. But, things eventually revert back to, or they, get reverted back to the mean, and they revert back to what the actual fundamentals are eventually. And so long story short, fundamentals are looking good, right? But something else I want to talk about, right? And before I actually talk about it, I have this snippet here from TrendSpider. We actually see here that were pretty much high from where we were back in December, right? We had, a rough period. I said, look, this is a buying the dip opportunity. Here we are now in price discovery mode. And so, where's the next spot? Well, of course, I don't have a crystal ball. And if you think I have a crystal ball, well, let me tell you, I do not, right? But we have here the golden Fibonacci extension. So this could possibly be another area of resistance from a technical perspective. But of course, there's a lot of different variables to consider. You can't just look at this and say, oh, well, this is the next level for the S&P 500. No, right? But the main point is we're in price discovery levels. And this is really good. This is really good. We could continue pushing upwards. And something else I want to mention is labor, right? We had the initial jobless claims come out today, and one of the things we see is that the California wildfires, they boosted the U.S. jobless claims to a 6-week high, but layoffs are still very low. And so, of course, it's unfortunate that people are having to apply for jobless claims because, people lost their homes, their businesses. I mean, it's very unfortunate with the natural disasters taking place in California, but the good news is that although we have this kind of bump in jobless claims, we still see that layoffs are still very low, which is good, right? Because you have to understand that jobs are the bloodline of the economy, right? I always say this in all my videos pretty much, not all of them, but very often I say that jobs are the bloodline of the economy because if you have a paycheck coming in, you could continue spending money. Now, once that paycheck gets cut, well, that's when things become very challenging, right? Because guess what? How are you going to feed your family, right? You're not going to go out and buy McDonald's. Now McDonald's revenues are going to go down. And I'm just using random, of course, hopefully you're not feeding your family McDonald's every night. But you guys get the point, right? If you don't have money coming in, how are you going to buy a Tesla? How are you going to buy Nike? You're not going to be spending, and that's going to hurt these public companies. So long story short, we have a lot of bullish news. Of course, we have some hurdles along the way. I don't think this is going to be a very smooth 2025. We have to see what's going on with the trend of inflation, right? The rate of inflation, and of course the talks of tariffs. But we will save that for a different video. With that said, make sure to check out the links in the description below. There's a link to join the Push and Profit private group. And before you guys go, make sure to check out this video right over here where I break down how to dominate the market. I'll see you guys in that next video. Take care, guys.